Hello everyone, welcome to my channel. I hope you're doing well. Don't be too harsh. It's going to be my very first video today. I'm just going to go through some ICT stuff trading on the Riv. For example, in our case today, we have Boom 1000 on the 30 minute. So most people trade Boom or Crash on the 1 minute. I don't know why I always used to trade Boom and Crash on the 1 minute, but most of the time the experience that I had with that is literally a recipe for disaster. Because everyone wants to scalp Boom and Crash and it goes the opposite direction, or they catch a huge spike against them and then the account is blown, or there's a lot of damage done to the account. So what I'm going to show you today is literally you can trade Boom and Crash exactly how you trade Nasdaq, US30, Forex pairs. You can literally trade Boom and Crash the same way you trade Forex pairs. Okay, so I have a little list here. The first thing we look for is liquidity needs to be swept above or below a previous high or low. So in this example, if this is our liquidity, it's been swept. Now, the next thing we do, we need to wait for a market structure shift. So this is where the market structure shift is happening. Right here. Okay, there needs to be a market structure shift with a big impulse move to the opposite direction of where the liquidity was swept. Now you wait for a retracement to the 50%. So let's say this is your impulse from the low to the high. You want to enter anything below the 50% in the discount area. All right. So we wait for the 50%. Below the 15%, enter on an order block. So I found the order blocks works really well with the Boom and Crash pairs. So let's say this is your order block. All right. All right, enter on the order block. Now your stop loss needs to be below or above the previous high or low. So in this example, if you enter here, your stop loss is going to be below the low, and you're going to target the next level of liquidity. Now, where is the next level of liquidity? It's going to be here. There is your next level of liquidity. So, for example, this one will probably be 3 to 4 risk reward. All right. So let's take this to a live chart. Here we are on a live chart. We are on Boom 1000, the 30-minute time frame. So let's quickly go through all of these steps, make sure the trade is valid, and let's see what happens. So I'm going to go to the 5th of October. Let's start here. Liquidity needs to be swept above or below the previous high or low. Let's have a look. Liquidity has been swept. The reason why I chose this liquidity to be swept is because when you look at the left, there was an order block there, price broke there, impulse move, came back, tapped in. There's that market structure shift. It literally tapped it, came back to this order block. As you can see, tapped into that order block. The reason why I chose this liquidity sweep is because it's just above the order block, the point of interest. So we swept the liquidity. Now the next thing we need to do, we need to wait for the market structure shift. So this happens right here. Market structure shift. Now, when the market structure shift occurs, we want to see a big impulse move away. We need to see a big impulse move for this trade to be valid. Now we need to wait for the retracement to the 50%. So I'm going to take it from this low to the high. As you can see, it came down to discount below the 50%. So I want to take a trade below this area. It needs to be below the 50%. Let's just mark that out, and then we can delete the fib. Okay, below the 50%. Now, market structure shift. Now, enter on the order block. Now, I normally choose the order block that's the furthest away. Yes, you might miss some trades, but the trades that you do take is going to be either high reward, or if you lose, remember not every trade is a winning trade. The stop loss will be minimum. Then you know you're not ready for this trade. So if you get stopped out, you know the market wants to go the different way. All right, so I marked out the order block. Stop loss below or above the previous high. Now let's have a look here. So if I enter on the order block, my stop loss just below this low. And where do I target? I target the next liquidity, where the next liquidity is going to be. And it's going to be on this high. So remember, the next liquidity is going to be on this high. So when I drag it out, let's target it. 4.92 risk to reward trade. Perfect. As you can see, it literally tapped the OB, retraced away, came back, and went. Now, let me show you something cool. Now, you will see we're on the 30-minute, right? Let's go down to the 15-minute to see if there's any entries there. Let's go to the 5-minute. All right, beautiful. So look here, exactly the same model that I showed you now. When you go down to the 5-minute, this happens. Let's quickly see. Liquidity swept. You can literally see it's above an old order block. Market structure shift. Impulse move. I want to enter literally below the 15%, the 50%, sorry, 50%. Let's mark that out. There's the 50%. And let's mark out the order block. Enter from the order block. Where do we target? This, you can use this as an entry point. You can target the higher time frame, liquidity, the point of interest. So you see, everyone, it's not just on one time frame. You can go like to the 5-minute, but you can use the same model to enter, but on the lower time frame as well, even if it's on boom and crash. I would suggest, if you're getting started with these types of concepts on the boom and crash markets, first start with the higher time frame. Don't go into the lower time frame and there you go, you are done, you are going to get it. It's not that easy. You need to practice it. Don't go to the 1 minute and scalp, boom, or crash the spikes, because I know a lot of people go actually against the spikes. I won't advise it. If you're in a boom market, go with the spikes. If you're in a crash market, go with the crashes. So yeah, I will be uploading more videos soon. Today we're just doing the Boom 1000. During the week, I will upload some more videos, and there will be more strategies shared on this page. Yes, and a little bit insights of the things I've noticed, especially in these markets, using the ICT concepts and everything. So it's not only in the Forex markets that these concept works, it works on the boom and crash markets as well. I hope this video helped you guys. Leave a comment below if you have any questions. Like and subscribe, it will help the channel a lot. And yes, awesome. See you on the next video. Cheers.